Hey guys, welcome back to Control Z Crypto. Just want to do a quick video with some updates on some of these ROI DAPPs that we've been tracking. I think there are a few interesting lessons from the last couple of days, which I wanted to share with you guys. I'm not going to go through this in a lot of detail because I want to keep this fairly short and to the point. So let's look at Polystaker first. That one has died, and it's been dead now for a day or two, and it may have lasted, I think, a day longer than my prediction, which is, within what I would consider the margin of error. And I had a comment here, may last longer due to hold bonus. So I think that hold bonus may have had some impact, but like I've said in the past, I don't think that hold bonuses or snooze functions really do much more than add kind of a day to, or potentially 3, depending on how big the contract is. Because once the contract can't pay, people are not going to be comfortable snoozing once it's going down. So I think that's kind of just showing that that's the case, that there was maybe an additional day on that past what I predicted. So that's a lesson there. So that's Polystaker. And next on the list is Multimatic. So Multimatic is still going down at the moment. So I apologize because there's just been some updates to this spreadsheet. These balance reflections may not be correct just because of the data that's being pulled out of the API. This balance is in fact going down for Multimatic, and I think a couple of days ago it was about 200k higher and maybe 300k higher the day before. So we are definitely in the downward stage for Multimatic. I had predicted kind of the worst case scenario of this ending today. And as I've said before, there are a few variables here that I can't model and I can't predict. So all I can do is take the information, make some assumptions, and put that in the spreadsheet, see what comes out. But basically, if a lot of people go in the 21-day plan and the 28-day plan, then it will last longer. So my model is based on just about everyone going into that 14-day plan and having to be paid out today. So, which I think is the rational thing to do for these ROIs. So I'm kind of assuming that people are behaving rationally. But there are a lot of people who are in those 28 days, in those 21 days. If that is a significant percentage, more than 1 or 2%, more than 5%, then that would add significant time. It would add potentially up to another week onto that. I think if a lot of people on the 21 day, but I don't think it will add much more than a week, kind of maximum. So that's why I've given a range of 19th to the 21st as I see this winding down. And remember that you see the really sharp drop off right in the last couple of days. So the fact that it's taken 2 days, it's gone down. In fact, I think it was 1 day to go down from like 1,300-ish to 1,151. So we're seeing like around just over 100,000 in balance dropping a day. In my head, if I just think about that figure and what that means, it's likely to be about 4 days that this lasts. So according to my model, ending today, just based on the kind of the worst case scenario, but likely 3 days, 4 days maybe left in this contract. I don't think, as I've said, that whole bonus is really going to add much to it, but it could potentially add a day or so. Sorry, not the whole bonus for Multimatic. It's called a snooze function. I just don't think people are going to be comfortable snoozing once that really starts dropping down. So an interesting one to watch, Multimatic. A lot of people are interested in it. They think it's going to be around for a long time. I'm giving it a week tops basically at this stage, and predicting sooner than that based on the modeling. But in any case, what I'm trying to do with this modeling is not predict the future for no reason, or try to come up with dates and say, haha, I told you so. I'm trying to make risk assessments. So based on the risk, I've said for a while, it's not a great time to invest in Multimatic. Okay, so Matic Fury V2, quick one on this. I covered this. This is the sneaky change on the V1 without any kind of publicity. They just kind of slapped a V2 on it, changed the contract, and kept it running. And they haven't been rewarded for that, really. If you see the investments really have been nothing. Like that's under $1,000 contract balance 4 days in. it's only 4 days. We've still got under a thousand. So whoever's put money in straight up, they've just been pulling that out. There's been no new investments. There's no audit on that. There's a very low uptake. This is, for all intents and purposes, it is dead. And I'm just going to upgrade this right now to, completely avoid. There's no reason you'll ever want to get into these. These Fury contracts, generally speaking, are pretty high risk, just given that 20 days, the 7-day minimum lock that most people will take. There's not really an edge you can have. Pretty much you have to be right in there, one of the first investors, and there needs to be people behind you as well. And this is not the case for Matic Fury, so on its last legs. Matic Vault. So I've done a little bit more analysis around this, and I think the last update I had was too soon to tell. Day one, on its fundamentals, it looked pretty good. It's a daily return. It's got a low interest rate, which I like from a risk perspective. But and I put a projected date of April 1st, just based on the model. But said it's too early to predict. And I had another look at the actuals for Matic Vault and updated the model here. If we have a look what's happened, basically the uptake has dropped down to nil. So, day one, 45,000, which is a pretty good day one. Not really strong, but it's not. If that gets too high, it's also risky. So I thought, okay, good start. But then from there, it's just dropped down basically to zero. So you've got a situation where this is the day one risk I've spoken about. And the kind of it's the fundamental contradiction in these DAPPs is basically you need to get in early, but if you get in right at the start, then you've got this day one risk. So you've got the risk that basically no one's going to buy in after day one, because the intelligent thing is really not to buy in after day one. So, and that's happened with Matic Vault. So given the way that Matic Vault is set up, basically it's a daily return. So it doesn't kind of the curve it follows is pretty much just a gradual drop until it runs out of money. And the projection here is around, what is that, the 28th of March. So it's definitely do not invest in this one is my opinion. And the overall timing for that is, what is that looking like? Matic Vault. Sorry, let me just put the right date in here, 3/28. That's the date that the updated model was predicting. So an overall period of 13 days. So I think what that means, just because it's a daily return structure, if you got in on day one, you may get back your investment. You may get back, even with a very, very slight profit. Anytime after that, you're probably going to lose money. And even if you got in on day one, later in day one, you probably lose money. So this is obviously a higher investment, and I think a learning case as well, that there is a real day one risk on these if the uptake on day one is not too good. So I think it's worth looking at that day one uptake, the contract balance, and making sure it's somewhere in the hundreds of thousands. I think below 100,000, it's probably an indicator that it's not going to get enough traction, and it's probably not going to be worth investing in. So yeah, that's about all on Matic Vault. And actually, one more thing I'd say, in fact, I put in the title of this, or in the thumbnail of this video, that is this the death of daily return apps? Because when you have something I've said as well before, when you have apps like Matic Vault that have this kind of daily return, which I like from a risk perspective. Also, as I've said, you can get some of your money out every day, and it means that if it doesn't hit the minimum lock, you don't lose all your money. There is still the issue with that is that there's no edge that you can have as an investor apart from being early. So if you're early on this and it picks up and it has good uptake, then you're going to make your money back and you're going to come out of it with a profit. So, but if you get in and it dies, you're not going to get a good profit. But whereas something like take anything that is based on Matic Staker. So I'm just going to choose a random one here, multi-chain staker. where you've got these kind of this kind of structure, most people go into silver because it has a really high rate and it has kind of the lowest risk of all the locked plans. So you can, I'm, based on how things have panned out, most people kind of go into that. I think you can get an edge by waiting a day, see how the uptake is, and going to savings and getting something around 120% ROI, which is still great for 2 weeks. To get 20% profit in 2 weeks is still great. And that's how you can get an edge out of this kind of structure. But I think as people really get kind of clued in and savvy to how these ROI apps work, these daily apps become less of a good investment because you can't really get an edge. You can only be early, and if you're too early, as we've seen, you can get that day one risk and lose money. So important lesson there from Matic Vault, I think. All right. Matic Stake and Matic Fomo V2, I'm not going to spend too much time on. We're kind of in the middle of the lifespan for these ones, which is generally speaking about 2 weeks. For both of them, I've called out really high day one investment of around $1 million or over $1 million for both of them. And then from that, it's just really dropped off. So, day two for this one here was 29,000 after a day one of about $1 million. And so that's the same thing. If everyone is getting in on day one, you do not expect it to last any longer than the 14-day minimum lock that you have on those. So definitely, obviously not a good time to get in, and anytime after day one or day two is not a good time to get in. But what I did say initially for these is so Matic Stake and Matic Fomo, basically, if you are getting in on day one or are getting in after day one, I would go into the plan one because that's where you kind of get a little edge. As I've said, that interest rate is going to be slightly higher on day two. You're going to get kind of a less risk and still a good return without the risk of this 14-day plan. Because if no one goes in after day one and everyone's on the 14-day plan, a lot of people are going to miss out. So, once again, my personal, this is the way that I approach investing, not financial advice, all of that stuff. I'm not a financial advisor. This is just how I approach it. I think that plan one gives you a good edge if you can get in kind of on day one or day two when you've got some assurance that the contract is going to do well. But it might be too risky to go on plan four, given that the way that these are all kind of flash in the pan and they die after generally 14 days, exactly 14, 15 days when those initial plans expire. Stable One V3, I did do a little update on that one. So this is another one they've kind of sneakily added a V3 without kind of putting anything on the page. And I thought that was, interesting. And in the video I did around that, I said, look, basically, I'm not sure if I would put any money in this, invest in it. I do like the daily return structure. But I did do some updated modeling with what has come in to date, and you look at these daily new investments drop down from this high on day one of 245 down to this day, day 5, about 6,000. So with a model of around 2,000 roughly daily new investments, you kind of get a curve that just starts immediately kind of dropping around about a couple of days ago, dropping down to 0 with a predicted end date of March 27th. So if you got in on day one, given that it's a daily plan, that's probably going to hang around long enough to basically get your money back, but it's or at least come close to it. So again, that's that risk mitigation, but you're not going to get anything high out of that because the uptake just hasn't been that high. And so this is the same thing, Stable One. And Matic Vault, the same lesson there around the lack of an edge for these daily withdrawal plans, where there's no kind of lock option that other people can take advantage of. Basically that you can take advantage of other people who are taking advantage of. And so if they don't have people coming onto them, if they don't have the hype, if they don't have the uptake, then you do mitigate your risk, but you also probably end up slightly behind, or not that far ahead. So lesson learned there. I think the only time you want to get into one of these daily return plans is probably not on day one. it might be on day 2 or day 3 if there's some momentum behind it. So that's something, definitely a lesson I'll be taking from Matic Vault and from Stable One. Okay, so I'm not going to really talk about a lot of these Avax ones. They're all risky. They're all late. Maybe just have a quick look at Avax Fomo. So I think I mentioned this on a recent video that it was kind of starting up in a couple of days' time, but at that time there was no audit. There is now an audit, and I've had a look at it, and it's fine. You know, it basically reflects what is on this dashboard, 8% with a 10% deposit, which is zero reinvest, I think, on this one as well. And the uptake has been pretty good on day one. You can see here it's 1 day old, and 4,500 Avax, which is decent. Remembering the difference between an Avax and a Matic. So that's a reasonable early uptake. I've said it's still too early to model because, as we've just learned, you know, day 2, this drops down close to 0 or 100 or whatever it is, and that's really going to change the way that this is going to pan out. So Avax Fomo, my strategy would be to avoid silver, just given if you're investing today, avoid silver because if the day 2 uptake is low, then you're probably never going to get that back. And I would always just stick to savings because that's where you get the edge. If everyone's in silver and you go in savings, then you actually have the ability to kind of go in, get your profit out early, and mitigate your risk and still make over 100% profit, which is the objective here, without kind of having that risk of just getting nothing back. So in my mind, that's where the edge is, and that's what I would do. I don't think I'm going to invest in this. I don't actually have any investments in the Avax ecosystem at the moment at all, so I probably wouldn't. I'm not going to personally invest in this, but that is my view on Avax Fomo. And lastly, so Fantom World, Multimatic, both late at this stage. Fantom Fomo I wanted to just cover as well because someone asked for a update on this one. And so I did do some modeling on Fantom Fomo, and it's an interesting one because I had to put in actually some compound interest calculations here, just the way this is structured. And again, similar story to Multimatic in that this model looks at what would happen if everyone gets in on the 14-day, and if everyone is in on a longer period, or large number of people are in on a longer period, then this curve is going to kind of correspondingly stretch out. But what I think this model shows is if you look at this day 1 on Fantom Fomo, it's really high. It's in the 2 millions. We can have a look at the figures here. Day 1, 2 million Fantom. Day 2, 1 million Fantom. Then you got a sharp drop off, and something much lower. And I put 10,000 in the model. Maybe you think that's too pessimistic. You want to make it 20,000. As you'll see, it won't change really the end date because this is too little, too late, essentially, because you've got all of this investment up front, and assuming that's in the 14-day lock, it needs to be paid right here, and that's why this just drops off so quickly. So I wouldn't get into Fantom Fomo today. If you are in Fantom Fomo, my target end date is the 22nd of March, and again, if more people are in the higher brackets there, the higher the higher plans. So Fantom Fomo is the same Matic staker structure. If a lot of people are in plan 5, plan 6, it could last a bit longer, but I always assume people are in plan 4. Conversely, if a lot of people are in plan 1, then it's going to last possibly not as long because you don't have that locked period into the calculation as much. So I think that 3 days time is roughly a reasonable expectation. But as always, it kind of comes with a range, especially with these lock plan ones. It comes with a range of a few days. But if you just, I think Fantom Fomo is one of those that's almost exactly the same as a Matic staker was, in that percentage goes up every day, and as that goes up every day, the amount that the contract has to pay back is very high. And we can just look at what the actual curve was for Matic Staker, because that was a good indication. Matic Staker had some success because it had kind of low initial uptake with a building momentum, but you can see what happens here when all of the investments from around this time have to be paid. And remember, everyone has to be paid like 1.5% of what they put in, or double what they put in, or even more around this time. So that's why you just get this kind of collapse really quickly at the end. And that's even more evident when as Fantom Staker, this rate is increasing every day. Unlike things like Multimatic, where you've got that kind of stable 7% return, these tend to last longer. But none of these things really last longer than 28 days. I think that can pretty much be an upper limit that you might have in your mind, just as a guide. So 14 days is kind of the worst case. 28 days is kind of the best case. And most of the time it's going to be closer to 14 days, unless you get like the rare one, like Matic Staker, where you had more investments coming in kind of a week after the initial, even 2 weeks, because this is the contract balance, this is not the investments, and even 2 weeks after the launch, and then you kind of prolong it that way essentially. So that's going to be the exception rather than the rule, so keep that in mind. All right, thanks everyone. I think that's about all. As I said, I want to keep this fairly quick, so 20 minutes is pretty good as far as my videos go. So just the usual spiel here. I'm not a financial advisor. This is all my own opinion. Please do your own research and try to understand how these work. If you like the channel, if you find this information interesting or useful, I would appreciate you hitting the like button and subscribing for more content. As always, there are links in the description to all of these apps, and if you do want to invest, which in fact I would probably say don't invest today, despite the fact that I do get money if you invest, I would say on all of these, my opinion is don't invest on any of these. It's too late, but if you do, please use the link, and I'll get a cut out of this, and I will be updating this with some newer ROI apps and trying to give you guys the information as they come out. I don't want to be one of those YouTubers who comes on and says, hey, look at this new ROI app, everyone jump in and I'll get a commission. It's not what I'm here to do. I'm here to provide good content. I'm here to provide information, and I'm trying to build my channel through providing useful information and good information, rather than just being like a hype guy for all of these and try to like get some commission. So yeah, absolutely, there are referral codes in the description, but that's not what I'm here to do, and I don't want to get stuck in that trap of trying to promote things that I don't believe in just for a couple of extra bucks, because I don't want to screw my my subscribers. So that's basically it. So thanks again for watching, and I'll see you in the next video.